What's up guys, Americana back here with another video. We haven't talked about it in over a month, but since I called the top in gold about a month ago, my conviction has only gotten stronger. Today we're going to dive back into why I think the metals market is finding a peak and what that means for risk on assets. Alright guys, hopefully you guys do remember my past videos talking about the top in gold. I actually want to start on the daily time frame for gold. You guys remember that video I posted back about a month ago? I was like, hey, we are getting to the 4.236 extension, 4.618 extension. This is typically where tops come in. Since we got to this point, gold had a 20% pullback in a matter of days. Silver had like a 50% pullback in a matter of days without really getting any solid momentum after the fact. We'll do this exact same exercise for gold, but if I go ahead and throw some fibs on here, you can see we got back to retracement levels, unable to break through thus far, which would actually give me a target of about $3,600 on gold, which is a massive move down that I think a lot of people do not see coming. Again, we're on the daily time frame here. I am looking at momentum absolutely bleeding, looking to cross over into bearish territory. This price action looks incredibly weak as well. Moving to the weekly time frame now. Last week we had our first confirmed weekly close on lower momentum, and I would assume with what's about to play out on the daily time frame that we see this trend continue. Again, this is after hitting a 4.618 extension on its Fibonacci extension levels. Now we can go ahead and take a look at silver as well. I'll get this fractal out of here. We didn't quite make it all the way to the 4.236 and 4.618 extensions, but we did get about halfway to the 2.618 extension, which you can see perfectly tapped in there. Weekly momentum is about 10 times worse than gold here, continuing to roll over. In the daily time frame as well, with weak bounce after weak bounce after weak bounce, looking to cross back into bearish territory momentum as well. Similar to what we did on gold, we had our fib retracements. You can see we got back to the 0.5 fib, which would give us a target of about $48-49 on silver, which is interesting because that would be a retest of the all-time high, which would look something like this on silver. Real quick note in here as well, you can also see momentum on the monthly time frame rolling over, which is just another layer of confluence. All right, really quickly, we'll get these indicators off here. I told you we would recap what the implications were for the rest of the market. To do that, I'm actually going to pull up the Dow Jones. This gives us a bit of a more historical look back period, and this was the case that I made in those videos about a month ago. But each time gold went on a parabolic rally and then cooled off, it has never been a bad time in the market. It's actually been an early indicator of a broader risk on rally, in my opinion. Now, what am I defining as a parabolic rally? Well, just a rally that breaks previous all-time highs. You can see that in this rally here, move down, break all-time highs, this rally here, move down, break all-time highs, this rally here, move down, break all-time highs, and then to where we're currently at with this rally right here. And what does this time up with? If we find the top in gold back in 1975, we can see that once this did roll over, the market was able to continue to the upside. Let's do the same exact thing looking back to 1980. Gold goes on a parabolic rise, finds a top just before the stock market goes on an absolutely generational run. All right, now more recently, looking back to 2011, we can see when gold went on its parabolic rise, found a top. Once the top came in, again, very good for risk on assets. Now, despite all of the fear headlines, despite World War III, despite all of these things, despite what even people in crypto are telling you about there's a bull market somewhere and you need to be chasing these metals to protect your wealth, these people could not be further from the truth. We've seen over the course of history that parabolic rises from the metals market is nothing but an early indication of a broader risk on rally. What these people are asking you to do right now is chase one of the fastest, largest rallies out of the metals market in history while fading Bitcoin and crypto that are sitting at some of the most oversold levels in history. I'm honest to God not sure how people are falling for this, but please, 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 please do not fall into this camp. I told you gold would stall out at the 4.618 extension. It's now not been able to get through retracement levels. While there's fear in the stock market, a breakout in the VIX, World War III headlines, and crypto sitting at the most oversold levels in history, like I mentioned. This whole idea of there's a bull market somewhere is one of the most fundamentally flawed ideas I've seen come out of anybody in the crypto market in a very long time. Yes, this is true. There is often always a bull market somewhere. But this only matters if you are able to get in before the rally starts. And I can promise you the next rally is not going to be coming out of the metals markets. It's going to be coming out of the assets sitting at absolute bear market lows. So hopefully this video made sense to you guys. If you guys do have questions or want to see this covered on a deeper level, make sure you check out my other video on gold posted about a month ago. And if you want to get a free breakdown of the crypto market and macroeconomic environment every week sent to your inbox, just click the link in my description to join my free weekly newsletter. I'll catch you guys in the next one. I appreciate you for watching. Peace.